Another episode of Trader Cafe. So, as is the norm these days, what I like to try and do is to go and revisit some old guests, some old friends, and to try and find out what their views on the market are. And of course, it's quite an exciting time because it's September, and we know that everything seems to get more volatile in September. And so, what I'd do is I thought I would invite Ainsley Clubb along. Hi, Ainsley. How are you?
Hi, everyone. How are we?
And today we thought we'd try, as a bit of an experiment, we'd have a bit of a technical teaching. So there's a few patterns we'd like to look at, and you guys have a chat. So if there's a particular market that you'd like us to have a quick scoot through, then we could do that after we've had, randomly we've looked at the 3 or 4 that we're going to look at today. So welcome, Ainsley.
Thanks, and how are you?
I am good, thank you. And it has been a fun-filled week. I think from a trading perspective, it's been quite exciting. We appear to be getting a little bit of volatility in the stock market, which then creates a little bit of volatility everywhere else, it seems. Are we going to taper? Are we going to taper or aren't we? Are we going to raise interest rates in New Zealand, given that we're in the middle of a COVID lockdown, or aren't we? There seems to be many things that are happening around the world. Nobody quite knows what's going on, which is good because it makes for a little bit of volatility for us. And as traders, we always like that volatility to come and help us through our trading week.
Yeah,
and
volatility and a bit of excitement.
Absolutely. And some days there is comfort in trading weekly bar charts because it gives you a little bit of room to maneuver. Exactly. So, folks, what I thought I'd do first is we had you and I'm talking to the audience now, had a chat 2 or 3 weeks ago about some of the cryptocurrencies, and we'll maybe look at Ethereum in particular. And so we've been on the shows, we've been talking about potential breaks in Ethereum and what that technical break would look like, and has something started. Well, lo and behold, the last 5 days have been a little chaotic, right, in the cryptocurrency space. Interestingly, the Chinese making all cryptocurrency transactions illegal, I think it was on Friday, wasn't it? Actually, yes, making it illegal, appeared to slightly upset the market, but not upset them enough that the market had any kind of, the crypto market, any kind of volatility. There may be something going on in the background, but in terms of the majors, right, so the Bitcoins and the Ethereums, not a huge amount of movement compared to other days. But I think sentiment-wise, wow, this doesn't help. And clearly there's some change coming in China. I guess they were probably like us to all use their own cryptocurrency, their own digital currency, rather than using some of the other currencies instead. But whatever the reasons, this isn't, I don't think, a positive development for the crypto market. And I don't know how long it'll take to work its way through the system, but I see this as maybe the thin end of the wedge. I think, as one of my old trader friends used to say, there's always more than one cockroach. So when you hear headlines like this, you tend to think, well, maybe something else is going on. Anyway, that's by the by, because that's called a fundamental piece of information. However, what we're going to do now is we're going to have a look at Ethereum. Now, if those of you who are at home at the moment and who are watching this, by all means, let's pull up the crypto, but I'm going to try and help us a little by sharing my screen. So hopefully you guys can see this. We've got a nice chart of, is that coming through okay, Ainsley, the chart of Ethereum? Brilliant. So, now, my drawing tools on Ethereum are absolutely appalling. So I'm going to probably make a huge number of mistakes here. But what I want to try and do is we'll just kill that, and then I'll put a trend line on, and we'll do something called a trend line, yes. So this is one of my favorite patterns. But first off, let's get some perspective, and then I'll ask Ainsley to have a quick chat about this. So when we look at that trend line, what we see on the weekly chart, because we always like to pull it out, right? I'm a huge fan of starting at weekly charts. Most of you, probably similar to Ainsley, well, Ainsley maybe not so, because she's really a full-time trader these days. I still hit the the semi-part-time category. And therefore, what I try and do is I try and start at weekly bar charts because that gives me a little bit more understanding. And you can see the Ethereum fun times, right? From 2020 up to 2021, and then the big boom in May of this year where we saw Ethereum go to crazy levels up into the 4,000s, and then the crash. And now we're in, then there was the low volatility time. And I don't know how many of those of you out there remember the time when I was saying, in order for cryptocurrencies to rally, we need volatility to reduce. And lo and behold, for the course of 3 months, that volatility reduced. And then here we go again with another really strong rally from that 1,800 mark all the way up to almost 4,100. Right, okay. So on the weekly chart, you can see this pattern. Here's your nice big move. And then here's what we call the retest. What are we doing here? Well, actually just testing the highs. Now, from this point, we haven't rehearsed this, but Ainsley, would you like to take over and I can drive the chart pattern if you would like to look at this in a little bit more detail?
Okay, from the weekly point of view, yeah, we've retested highs. We could call that a neat little double top. And no, some people would like to call it double top from the other side as well. And I'm looking at the close particularly, not looking at the high of the previous, reaching up into that 4,400 level. So with double top, what we'll be looking for is a break of the neck. If it comes down, do you think it will come down?
Is that back at me again?
I was just asking, what are your thoughts? I've got a double top here.
Yeah.
Double top would seem to indicate to downside movement.
Yeah, I think it does. And so one of the interesting things I like doing with TradingView guys, and TradingView is free, by the way, for the record, if you get it at this basic level, but it's pretty spectacular what even the free version does. When you look at it on a line chart, okay, you take away those nasty bars, that exact thing that Ainsley was talking about, that double top, there it is, right? Absolutely clear as a bell. Now, when you looked at that chart, would it be very much easier to say, are we just going to rotate back down to the bottom of the trading range again at 1,800? Well, that seems to be a reasonably good assumption on the basis that we've topped out at the 4,000 mark. So ignoring the big numbers and what it all means and the size of the moves, that to me, I think, is quite telling when you look at that weekly closing chart as to what's going on. You can see the big trend up through 2020 and into 21. You can see the comeback, the retracement back. You can see the low volatility, and then that retest is like clear as a bell. How you've almost got it just goes a fraction higher on the close, just a fraction higher, and then falls away again quite quickly. So then the conclusion that you could draw from this, just looking at that line chart, is probably we're not going to stop here, but who knows, right? Because we never know. So let's go back to the bar chart, and maybe let's
drill down a little.
Yeah, and I'm just looking at this. This is actually 3 weeks down here. This is Julian doing what Julian does best, which is as I'm going through the chart, I'm just recognizing a couple of things that are quite interesting. So for those of you that do follow what we've been doing, a lot of our analysis used to be that we were looking for in an up move, we look for two negative bars, and then it gives you normally quite a good buy signal. We can see that absolute classic here for those of you that recognize it, 2 weeks down in the cryptocurrency. And then we had the mother of all buy signals where it went from that, 1,600 mark all the way up to 4,000. So that was spectacular. And then we had another two bars down here. This is clearly restoring the bull market because we had a bounce off this support. We had 2 bars down, we were bounced off support and then rallied again. So quite interesting. Now what's happened is we've had 3 bars down. I'm trying to find, there was 1 3-bar down here. Oh, by the way, just even the 2 bars down that we had off the top, you still, I love the scales here. You still went from 2,000 up to 2,800. So you still made 20% in a couple of weeks. Love this. So the reason I'm laughing is because the volatility, as a bond trader, this type of volatility is nosebleed, and I've never seen anything like it in my life because that's where I began my trading career. As a foreign exchange trader these days, you can just wistfully look at this, go, "Oh my God, wouldn't that be so exciting?"
Yeah, I wish.
As a trader of Tesla or some of the American stocks, you go, "Well, this seems quite quiet by comparison." But anyway, here we are. So This is the, I'm just looking at the 3 bars down, signifying what turned out to be a continuation. We've now got 3 bars down again, although one of them was an inside bar, hence the reason why I was hesitating in my comments. But for want of a better description, we're 2 weeks down and things aren't looking so good, but I'm going to call it 3 because that inside bar to me counts in this instance. So let's drill down to the daily chart and see if we can find something else that we were looking. So the reason why I was playing around with some lines, and they weren't very well drawn lines, I should get this. I just, so this is the reason why Julian doesn't love trend lines, right? For those of you that have ever sat through one of my presentations, you know that trend lines have a place, and I love them to bits, but most of the time I'm not sure you can make a lot of money out of them. But anyway, let's call this a sell-off and a consolidation. Ainsley, I can see the breakout, but maybe you'd like to explain it to people.
Okay, so where we've got your fabulous trend line, I can't even look at it. I struggle with it. But anyway, what have we got here from the top of that massive sell-off? And if you were to pull down another trend line, down, down, down.
Hold on, coming. From
top of that line, top, that, back up, back up. All right, you're just going the wrong way. Could you please put the top of the trend line on the overextended bar that went from 3,950 down to, thank you, that's it. That's it. Oh my goodness.
My second favourite pattern.
What have we got there? We have an equilateral triangle.
Yes, we do.
No, I couldn't help myself because I know how much you love triangles and trading them. So we've got a breakout of a triangle. Now, can we go back to being something a little more technical, which is what we have had is a breakout of that consolidation. If we had around the 3,200 mark or just below that, could we have a horizontal line, please?
We can. I don't know how to do that, but I'm going to draw it like this.
See if that gives you some options. Yeah.
Where would you like your horizontal line to start from? About there?
About just under the, about there. Just under the 32. Yeah, sort of in there. Bit. Aha. So we had a breakout of that area. And if you extend that and put a nice solid horizontal line that goes all the way across, you'll realize that that level of previous resistance now becomes support, comes back, retests it, and is now breaking away down to the low side. Now, we have not got a break below that lowest low. 1, 2, 3, 6 days ago.
This one here.
Yeah. So again, where it closed, it has closed right on a fairly strong level of support. So if you look over on the far left-hand side of your chart, 1, 2, 3, 4, 5, 6, you can see that it struggled around that level as well previously. Up, there we go, in through there. And that is where it's bounced off between that range from the horizontal down to the closing price on Friday. But if you go back to August, it had a bit of a play around in there. It's come back and retested it last week, and then it hasn't closed below it. So are we going to see some more consolidation while it catches its breath and actually absorbs and chews on the news from China saying the transactions made with crypto? Initially, the drop when China made that announcement, it wasn't until there's some clearer clarification around the fact that it was the transactions made with Bitcoin were deemed illegal, rather than China outlawing Bitcoin or crypto per se. Once they clarified that on the news outlets, there was clarification around what they had said. That whole movement south, the sell-off, almost abated. And it just sort of sat there and teetered and just didn't move much further than where it had already gone. So it's an interesting level. What I find with the cryptos is they do tend to, they act a little bit like gold in that, one, when it moves, it really moves, and two, it seems to really respect its levels.
Yes, I think it does too. So look, I think one of the great things about crypto is how do you create a fundamental from crypto? There's a broad fundamental thing about digital currency. We all get that. But the reality is there isn't going to be a CPI number or GDP number or some foreign exchange reserve number that's coming out that you can focus on. So it's almost like it's pure technical trading. Right. So anyway, hey guys, now look, let's Ainsley, if I could take back the wooden spoon for a second, the talking spoon for a second. So what I wanted to show you guys, right? So that big sell-off, do you remember this one that we had when it went from 4,000 down to crazy 3,000? I lost 25% in one day. Okay. Crazy, right? Okay. Crazy move. That defined the market as switching from a bull market, I think we can safely say, into a bear market scenario. Now, do you remember on the way up, I was talking about those two bars, right? The two bars we looked at the weekly chart. Now, here's just to prove that sometimes these things can work when you look at the daily chart. Okay, but we have to think about this a different way. So hang on a second, what trend are we in? Well, on the previous one, when we were looking at weeklies, we were in a bull trend. Okay, now things are a little different. And now we have a bear trend. Why do we have a bear trend? Well, because we waxed 25% of the cryptocurrencies in one day. Wow, that's insane, right? Almost as insane as the 1987 stock market crash, but we'll move on. So we've got something that's really interesting. Now, following that point, when we have two up bars, what happens next? Now, conveniently, I've managed to find the down arrow function on TradingView. So now you have three beautifully illustrated down arrows, which signify the closing price on the two up bars. There are three instances of them. Now look at what happened next. Now, what we do with this, is this a trading system? No. What it is a way of getting you thinking about markets. You could create a trading system from this, because you could say, well, look, why don't I just try selling on the close of the second up bar if it's in a downtrend, and I'll see what happens the next day. And then if it closes lower, then I'll get out of the position, right? So if it goes my way, I'll get out of half the position or something like that, right? Okay, so here, guys, girls who are watching, is the beginnings of a trading system. What have we done? We've established a pattern, okay? And in establishing that pattern, we've gone, okay, now we have a pattern. We can have the beginnings of thinking about how to make money out of it. Now, in this case, we have to try and work out a place to sell. So let's sell on the second up close bar. Okay, at the closing price, right? So if we sell that day or that bar, and then we look to get out on something like the first profitable open, at least half of the position on the first profitable open, what happens next? Okay, so let's take a look at arrow one, right? Here is arrow one. We would sell there. You guys can see this. You don't need me to play around with this, right? The market then the next day closes at a lower close. Bingo, we made some money. So therefore we would take some money off the table. Now you can take it all off the table if you're a short-term trade, or you can do other things. Now, how you do that is almost entirely up to you. Right, we're just playing around with the efficacy of whether this makes sense as an idea or not. We then go straight into two more up bars. Remember, we're still in this big downtrend. You know, we've been defined by this large down bar as being swapping from a quite substantial bull trend into a bear trend. Okay, so here's a second instance almost straight away, and we say, great, I've got another sell signal. Now, I may have taken half my profits here, and I may have been stopped out when I took out the high of that second up day bar, right, within 2 days. And, you can run some stop losses on this, guys. You don't need me to help you with this stuff, right? You can see how this works, right? And then we came on to the next opportunity. Here we go, two up bars. And then what happened next? Bang, well, actually, you were never offside with that position. Where you sold, depending on where you want to get out, because, again, first profitable close, was the next day. You got out with a little profit. If you managed to hold on to the rest and say, right, my stop loss is going to be, I don't know, something like some kind of average true range, or some kind of the closing price plus the average of the last 3 bars, 50% of that. I don't know, something like that, right? You can figure this out, right? Play around. Okay, what happened next? We waterfalled away into a big decline. And then what happened is we had 2 days of bounces. Oh my God, what happened? We sold the high. Look at that. That third arrow, we sold the high. And even then we only, oh my God, we only made, what did that close at? Let's just be randomly rough about this, right? We only made $200 on Ethereum on an overnight trade, and we could have made even more if we'd have managed to close it out rather than waiting for the close. But let's say that we waited for the close and we got out of half of our position, and we're still riding that short position. Now, would you feel comfortable being short from that place where we got short from? Well, you probably couldn't pick a better place, could you, quite frankly? So this is 2 things, right? And Ainsley has done it beautifully with me as well too. So you've identified the trend. You then identified where the key support and resistance levels are, right, as they unfold in front of you. Okay, most importantly, you've now, with those 2 things and that technical backdrop, you've also now got the basics of a trading system, because we've been merely observing what's gone on. And if you want to try the 2 bars down in an uptrend, okay, not the 2 bars up in a downtrend, but 2 bars down in an uptrend, you only have to go back and look at August to see the 2 instances where it also happened, where the market was trading up. When the Ethereum closed down for 2 days, it then rallied almost straight away afterwards in both cases. Okay, so do I have the ability to do a up arrow? I do.
Oh, you do. I was going to say pretty well.
Bingo, right?
Look at that.
Look at this, right? Oh my God. Okay. There's only 2 instances. I'm just looking through the chart and I can only see. So in August, you've only traded twice. You've only traded twice, but look how much money you've made. Let's go and collectively add it up, shall we? So let's say that we ran with this and we held for 2 or 3 days, because that's probably a more reasonable thing. So here we vaguely made something in the order of what? I'm going to go with $200 or $300 on Ethereum. Here, we probably only made about 1,000. Okay, so in Ethereum trading for the month, right, we probably made about $1,000. Okay, and then we swapped over when it moved into the sell mode, right? And since then, we've been reasonably successful and probably booked another $500 or $600 at least, and we've still got a trade running right now. So we've probably only made $2,000 on trading Ethereum for the last few weeks. Now, I know when Shukri comes on, sometimes that seems like a little bit of, that doesn't seem like much money at all. But trust me, to a foreign exchange trader, when something is worth 3,000 and you make 2,000 of them over the course of 2 months, you are knocking it somewhere out the park, between somewhere out the park and the beach on the other side of the continent. Okay, so this is good results. Okay, so now, as you can see, we have the basics of 2 things. We have good technical analysis that we've been working with, and we have a trading system. Now, what we need to do next is think about the future. So hang on a second. Let me find my talking spoon. Ainsley, I'm going to give it back to you, metaphorically, because it's quite hard to do it across the Tasman.
Oh, it is. What's that, Dutch?
The talking spoon is now finding its way back to you, possibly about where you feel the future may unfold for Ethereum.
Look, we're not talking fundamentals, are we?
We're not talking fundamentals.
No. And considering we have, as you said, lower highs, 1, 2, 3, I feel, as soon as, and I'm hesitating, because as soon as you say something as charming as I think it's going to fall away, somebody tweets something and it goes screaming back up in the other direction. And unfortunately, that's all part and parcel of trading a crypto. Don't you think?
It is, actually. And I think one of the challenges about crypto is that yes, there isn't CPI figures or stuff like that, but what there is true.
Sorry. Oh, sorry. Look at that level where Ethereum is at the moment. Look at that level back into. Is that June last year? No, June this year. Look at
it
that.
is such a key level. When it broke above that, it never came back. Now it's breaking back below it, right?
It's breaking back down. So we're going to have to see if it does keep going to the downside. I would imagine we're going to come, if it falls down, it's going to come back and retest this level before it has another crack down below, won't it?
Exactly. So,
well, it will. It should. It should technically, if it's a technical trade. That's the way it will normally go. Is it'll break it and then it'll come back and retest it, and then it'll continue on its merry way, which is exactly what it did when it broke through the level of resistance. Oh my goodness!
Exactly.
How strong is that level?
I know it's actually 2,700 is like, or no, this 2,800, 2,850 level is absolutely critical to Ethereum. So guys and girls, if you're listening at home, okay, so here's the thing, right? This is where some of this information becomes useful. So now you have a crucial pivot point in the entire market, that 2850 area. Above, we're good. Below, it looks a bit crappy. Okay, so that's what we need to bear in mind. So, here's another way of thinking about trading cryptos, right? What you can do is you can say below that level, it's a sell. Above that level, it's a buy, and then you trade accordingly. So in other words, if you're not quite sure whether you can work out the bull or bearish. Now, what's going on? Thank you for the message, Crystal. I really appreciate that. Ainsley's been reading the chat, as have I been as well too. And I won't. For those of you out there, you can go and look at what Ainsley has been. What Crystal has been saying, and Ainsley is laughing at on the chat. But I'm going to politely ignore that. So, guys, what I wanted to do, let's just park that for a second. Let's park the now, and I want to go back and look at the what happened when. So, for those of you that follow some of the work that I do and some of the work that Ainsley does as well, you'd have heard both of us talking about the sentiment cycle, right? And what that means. Now, the sentiment cycle is a way of organizing people's emotions about markets. So, when markets are high, everybody is supremely confident and of course they're never going to fall. And when the markets finally do fall, because everything comes back down to earth eventually, you get to the various points where you have sort of bit of panic, then you go into a discouragement, and then you go into some kind of like aversion. You just hate the place, right? So in stock markets, sometimes that takes like 10, 15, almost 20 years to unfold in extreme examples. The great thing about crypto is you can already see just here a classic example of the sentiment cycle in full swing. Now, let's just pick this up. Ainsley, if you don't mind me having the talking spoon for a couple of minutes on this one.
You go on your sentiment cycle. Yep.
So here we have, let's call this returning confidence, and everybody's happy. Okay, everybody is happy. Okay, as the market trades up. Now, what happens with this is the sentiment cycle says at some point in time, you get some technical levels are broken, right? So what are those technical levels? So we call it the, the nearby ones and then the fundamental ones. So if you were trading stocks, you think about the 200-day moving average, stuff like that, right? But what we're looking at, we're looking at Ethereum on such a relatively short time frame. We're just looking at pure technical levels. So look, the first major support point that we defined in this whole move here was either here or up here. Okay, that got broken on the way down. So subtle. Okay, so let's call that subtle. Okay, so there's a bit of a warning. You've got a bit of a red flag, and you can already hear the indicators and the alerts starting, right? Okay, then we have this major support point here. Now, when that breaks, all hell breaks loose, and you can see how the market accelerates down. It took one bounce, went up, and then came back, and then as soon as it took it out the second time, it started to accelerate. This area here, and I don't know how to do areas, so you just have to run with me circling the arrows around, is what I call the panic phase. Okay, so what happened is everybody who had a long position around here got out of their positions down here. The market then bounced, as they often do, and they bounced from 1800 up to 2800, so that's a pretty strong bounce. Okay, and then fell away again, and then fell away and drifted low in a low volatility drift all the way down to the major support again, right? So by this point in time, people are saying to me, I do not want to bother with crypto ever again. I'm in the discouragement phase. What is the point? Okay, what is the point of trading this? I've lost money. I'm not happy. I'm out. I don't care. Okay, then the market bounces a little and you go, well, so be it. It's trading in this trading range. And then we go down to the bottom here one more time. Here we go. This is the third time down. Oh, I don't, this goes to show why you shouldn't buy this, right? So you feel the emotional state of the market, given it's slightly psychotic, and I can't do what a very psychotic person tonight. But you get the gist of what I'm saying, that they're going, oh my God, this is just it. Why should I bother? Right? Whereas up here at the top, we were going, crypto's going to 10,000 for Ethereum, 10,000, it's on its way. Everything's exciting. Okay, so the different emotional states that you have.
Not psychotic at all.
It might be time for you to take the talking spoon back soon. So anyway, as I'm losing it completely, but you can see how the sentiment moves. Now look, what happened down here as we got down to this previous support level, third time down, okay, third time down, what began to happen? Oh my God, we moved into a major bull market on the dailies. Okay, so we literally took off, and for 10, 12 straight days, I don't know how many days that is, like 1, 2, 3, 4, 5, 6, 7, 8, 9, counting, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 22, 23, 20, 24 days. You had how many losing days, which were even substantial? 2, 3. 3 out of 24. So what's that, 90% of days, right, were positive? Okay, that's the definition of a bull trend. Okay, so this is quite interesting, right? So you went from this, oh my God, I hate crypto, to yes, 10,000, here we go again. And of course, we then broke out of the trading range and then rocked up. But something weird happened, because we know, because we looked at those weekly charts earlier, that we know that things turned around a little bit. Okay, and now we swapped round into a bear market because we had that big shank just here, right? And the market fell out of bed enormously. Okay, but this is the whole point about the sentiment cycle, right? Sometimes it can happen over much more compressed time frames. So guys, if you're not sure what the sentiment cycle is, or you've never heard me talking about it before because you haven't watched any of my shows where I've covered it, or the ones that Ainsley does when she talks about it, okay, go read Justin Mammoth's book, okay? And if you don't read that, go and look the sentiment cycle up on the interweb, because there's loads of things out there, and as a result of that you can find the various states of psychosis that the market goes through, and you'll begin to understand that. And when you start looking for the headlines, they will then fit in with your thesis around where the market is thinking in terms of its psychology, right? So usually you have a bit longer than this, but we're looking at the crypto markets on a daily chart, so it's all a bit exaggerated and a bit accelerated, mainly because the volatility is so high there. But if you go and look at stocks where the volatility is much lower, as we are at the moment, you would imagine that people are pretty confident about the stock market right now, okay, because the stock market's sitting near all-time highs, and it's been going up for about 4, 5, 6, God knows, 10 years, right? So you can understand that people's attitudes about stocks are fairly positive, right? So here is the thing, you know, that's when you start to see the headlines and you get all of this stuff, right? So we don't get the headlines in things, so we have to look at the patterns. Okay, that's why the patterns are so important. Anyway, hey, look, back to the future. Okay, so Ainsley's view was that I don't know if I can do this, but I'm going to try. I'm going to use a thumbs up now. Ainsley's idea. I love this. This is technical analysis, the Julian way, the Julian and Ainsley way, right? I have control of emojis, and of course, I'm a baby boomer, so me having control of emojis, at least I'm not speaking to you looking up so you can look up my nose, okay? But however, me in charge of emojis is always a very bad sign. So anyway, and actually, for the record. Do you remember when we went back at the beginning, we looked at those weekly charts, okay? We looked at those weekly charts. We saw that same level, right? That 1800 level on the line charts. It looked like it was a slam dunk to get there. So what we've done here is we said, look, here's the major resistance. It's up here. So this would be bad for us, right? We get up here, not happy not happy zone if we get back up here again and we spend any time up there, because what we believe is this level is so important, this 28.50, that as long as we keep trading below it, this is a reasonable target level. Maybe not here, it could be over here somewhere, who knows? With crypto, it can't go backwards, but it can get there pretty quickly amongst any of the time zones. Especially if we're in another down round, we've got, and it's normally a 20-day cycle and a 40-day cycle, you've probably got another few days to go on the down wave, and then maybe it bounces for a few days and then heads off again. Anyway, so at the moment, we have to make assumptions. So we're going to make some assumptions. So bad news is probably up here for what we're thinking right now. Good for holders of crypto, but we're in a bear market now. So from a technical analysis point of view, somewhere up here or up here isn't good. We're not really liking that because it doesn't fit our technical picture. But if it keeps going, then this is the area. Now, as you all know, market technicians mustn't do the classic double header, right? They mustn't or give you a time prediction and also a price prediction. Otherwise, they can't be proved to be brilliant because they will usually get things wrong. So when they're trying to be so precise. So neither I or Ainsley, I'm certainly happy for you to have the talking spoon and try that if you'd like to, but no. Okay, so Ainsley won't either, which is wise. We think it's probably going to go down. We just don't know when. Okay, so trade it as you see it, guys. And by the way, we've got a couple of little trading systems in here that are doing really well at the moment, haven't we? So we know what to do and we're patient and we can wait. Okay, so do you have anything else, Ainsley, that you'd like to talk to anybody about around the crypto?
Only with the crypto is, whilst we've been very technical about how that is moving and how it is respected levels and what it does, and you've got these lovely, neat little ring lows and low test bars and the perfect setups excuse me, on quite a few scenarios before it does go for a nice rally or a sell-off, is that it is very much impacted by an announcement out of China or an announcement from Mr. Elon Musk, or all those things. Even the cryptos are very much impacted by those kind of things. And whilst there's no scheduled timetable like we have very neatly with foreign currency or oil and gold, for example, that's one of the trade-offs I think you have with the huge volatility. You have the big moves because it is unexpected and it's total knee-jerk reaction to what is happening in the market and how it's perceived. So that's, I think that's your trade-off. You have the high volatility with fundamentals that are totally random.
And I think that's a very fair point. And so probably on that note, maybe we'll leave cryptos behind us and maybe look at something else. So, and guys, don't forget, those of you out there, if you'd like us to look at something, then please stick it on the chat because we're happy to do a make it up as you see it session as well too. Because obviously this is totally pre-programmed and we absolutely knew what we we're going to be saying here. So, as we do, this is a good exercise. Hey, just a quick flip before we go. Interestingly, Bitcoin actually looks quite similar chart pattern. I haven't really looked at the pattern too much. Oh my God, look at that sentiment cycle shift. Guys, look at the sentiment cycle. Go and look it up, right? Because if you look at it in Bitcoin, this is a classic. There have you got your head and shoulder, Ash's head and shoulders, your head and shoulders pattern that then turns into it. Look at that. You've got a panic, you've got discouragement, you've got the aversion point, the higher low, you've got a ring, everything is there. Everything is there for a sentiment cycle classic. And that is just on the daily charts. It's like you get it all in one go. Hi, Ivan, got a training question. Why does liquidity gap need to be filled? E.g., does Bitcoin go back down to 20,000 like one analyst, Gareth Soloway, says? Maybe, do you want to chat about the gap theory?
No.
Okay, shall I chat about the gap theory?
I can talk about gap theory. And here we go again, somebody saying it's going to go to a particular price. It either goes, you're trying to pick a direction and always be, yeah, anyway, you chat about gaps.
So gaps. Okay, guys, here's the most important thing about gaps. Somebody will tell you out there, as probably Gareth has tried to do, that we're always going to fill that gap. Well, that's a bit like saying oil trades between $150 and, well, minus 20, as it did last year. And there will be some gaps in that price. And somebody will say, well, if there's a gap at 65, we'll be trading that gap. Well, yes, that's very interesting. And I agree that probably from a technical perspective, we will indeed trade that gap. However, guys, we're traders. We're not analysts. Our job is to trade and make money. Now, if there's a gap at $5 in oil and it's currently trading at 60, all very interesting, but how the hell are we going to make money out of that? So this is the difference between trading and analytical work. So the analytical work is useful and can have some relevance, and then we have to try and make money. Now, second thing about gaps. Did I say there were two things? There's a second thing about gaps, right? They have a expiry date. Okay, and the expiry date for me from a trading perspective with gaps is quite quick. So if you're trading daily charts, like 3 weeks is quite a long time, okay, to even think about using those previous gaps. Okay, normally you tend to get gaps, short-term gaps are filled relatively quickly within the course of 4 or 5 days, right? Then they have some validity from a technical perspective and maybe from a trading perspective. The longer you go, the time value of those gaps just disappears, right? And it all becomes very interesting and very esoteric, but nobody's really going to be able to make money out of that. So your ability to make money out of gaps changes quite markedly in terms of the nearness of them, okay? And that's probably my thought. Do you have anything to add on that, Ainsley?
No, except for if it's going to fill it, it will fill it. And then you can look in hindsight to a chart where the markets come back down again and it's finally filled and they say, oh, the gap got filled. It's just like, no, the market just went down. I mean, it's one of those things. If it comes back and retests it, it's slipped, it's a weekend move, it will probably come back and then take off. But generally speaking, if it doesn't do it because the trend or the push in either direction is so strong, you just trade what's in front of you.
There we go. So great. And thank you very much for the question. You've also asked in there as well too, so I don't know who was asking the question. My chat's scrolling on so far now. Wayne, you've also asked about the Wyckoff happening now. Now, I absolutely know nothing about Wyckoff. Ainsley may know more than I do about the Wyckoff method, but can't help you on this one. Probably look it up on the interweb. And look, I encourage everybody with this to, if there's something out there that you think makes sense to you, then for goodness sake, investigate, build a system around it, trade, be incredibly successful, and laugh at everybody else who hasn't done it. Otherwise, you've got to sort of ask yourself, well, what is this teaching me? What am I learning from this? And if I'm learning something really solid about how markets interact, then that's really important. Okay. Otherwise, look at it, because it's always good to look at everything and then move on. Because unless you can make money out of it, it's not really very interesting. Don't forget, I keep coming back to this. We're traders. We are not technical and just technical analysts. So there's an old saying of mine, which is, you will find that most traders are really good analysts, but most really good analysts aren't necessarily traders. Okay. And so there's a subset there, right? To be a good trader, you've got to be a great analyst. So guys, let's move on, because, oh my God, I've just realized we are so short of time. Let me see if I can do coffee, because coffee is quite interesting.
I like a coffee.
So we'll have a quick look at coffee futures. Now, why is this interesting? Well, because of what's going on here. Now, do you remember? Let's go back to where we were, and let's try and get a handle on where we are. Right, now, when you look at that, this is why line charts are so cool, right? When you do some technical work looking at the background. So now Ainsley might not want to do much with a talking spoon here, but please shout out if you see a pattern. So for want of a better description, coffee came down over the course of 2017 and 2018 and 2019. It did absolutely nothing and traded down here. For those of you who don't know much about the fundamentals of coffee, obviously tastes good. And Starbucks is amazing, and all the other small coffee guys are even better than that. However, there's some other fundamentals, which are how much does it cost to plant a coffee tree? How much does it cost to get the coffee to market? And who's making money? Well, I guarantee you, down there at that 95, between 90 and 110, nobody was making any money. Coffee was like being made everywhere, like literally everywhere. People were growing it in their backyards, growing it in their back pockets. Literally, it was just made everywhere, right? There was an oversupply of coffee. Fast forward to today, okay, a couple of droughts later, a couple of conversions of various regions back to avocados, because apparently they pay more money. Because if you don't make any money out of coffee, then what are you going to do as a farmer? You're going to sit there at some point in time, you go, oh, well, let's just give up on that, and I'm going to go plant something else that I can make money out of. So you'll cut the trees down, and then you go and plant avocados. There's a bit of a turnaround time, a bit of a cycle, 3 or 4 years. So in 3 or 4 years' time, maybe the avocado market gets a bit floated, but gets a bit oversupplied. But at the moment, that oversupplying coffee got taken out at the same time as there was some frosts in Latin America. So what happened next? Well, what happened next, of course, is that coffee broke up. And then you've got a global inflation trade going on where commodities are lifting everywhere. So backdrop, very good. Fundamentals, weather-wise, quite reasonable. Capacity in the market has been shrinking, guaranteed that the market is able to supply less this year than it did the previous years. What's happening to demand? Well, as you all know, once lockdown ends, everybody goes back to the coffee shops again. What you also may not know is that demand is growing 10% a year compounded in China. They're catching up, and so global demand is actually growing quite quickly for coffee, quicker than people can keep up. So here we've gone from oversupply to now undersupply. And what's happened to price? Well, those of you who are amateur economists would know it doesn't take a genius to work this out. The price goes up, right? We all get this. So now let's go and look at our bar charts, right, to try and see if we can see some more interesting patterns. I'm not going to bore you with all this boring stuff where it did nothing down here. And for those of you that trade the sentiment cycle, you'll see the higher lows in there, so I'm not going to worry, right? But let's just go with what's happened recently. This is the weekly chart. This is the crash upwards, as I like to call it. So here's the technical crash up. And then we've had the sell-off, and that sell-off went from 220 down to only 175. So that's only $40 out of 220. That's only a 20% correction. Wow. Okay, that's quite a big move. Quite a lot of a big move, in fact. We did about 3/4, or I bet you that's a 618. Hold.
Are you going to put a
hold the fort. Hold the. Oh God. Oh no, that's not what I wanted.
Oh. You got this, huh?
Oh, here we go.
Top one. Yeah.
Oh, look at that, guys! Look straight into the 618 zone. Let's just put this up and kill that. Straight into the 618 zone. You can't make this up. Okay, isn't technical trading amazing? Okay. Well, sort of, because would we have bought the 382 given this updraft? Of course we would. Would we have lost money? Yes. Would we have bought at 50% because it's obvious this is a crash upwards? Of course we would have done. And would we have lost money? Yes, we would have done. Would we have bought at the 618? Yes, of course we did, because it was our third chance to do it. Even though we know when we buy the 618, but by the time it's retraced all that much, it's not going to give us much more on the top side. But we'd have bought it anyway because we love trading Fibonacci's. And finally, we made a little bit of money, probably the money that we lost back. Right? There's my. For those of you who don't know, there's my Fibonacci rent. Anyway, moving on. Right. Let's look at that weekly chart. Okay, so let's kill the Fibonacci because it just is too painful for me to look at. So here's your crash up, here's your retracement, and now here's your retest, right? This is what's going on. When we look at this on the daily chart, right, we start to see some parallels. Okay, now this isn't the same as Ethereum, is it, team? Okay, because when you look at what happened to Ethereum, we came a lot lower on our crash upwards, right? We came down here and the retest got up a lot higher. So there were some other things going on with Ethereum that weren't quite as easy to see, right, in terms of the way the market trades. So here's my thinking. Why has the market crashed up, come back, gone up, in a nice little three-wave pattern, tried to retest, come back, but now is starting something else? Because probably this may not have been, unbelievably, may not have been the high. Now, some time ago, actually over 2 years, I began to take a position in coffee, and I announced to the world that I was quite bullish on coffee, and everybody laughed. They did actually laugh at me quite a lot, in fact, and they were right to laugh, because for many, many weeks and months, I basically did nothing whatsoever. And it was almost like, let's just let Julian use up some of his capital in coffee because it's a complete waste of time. He's clearly not right about this. As the weeks go by, it goes nowhere, and yada, yada, yada. Fast forward to today, Julian's selling out his coffee position at 200, going, okay, thank you very much. That was very pleasant. I enjoyed that doubling in price. That was quite nice for me, right? So then I'm into the what do I do next camp. Okay, I did invest some down around here. I did also get out of some around here, right? Because we're still trading within this crash up, but as always with these things, cautious. Okay, you're trying to trade very much more volatile markets now. We're trying to trade markets which do 10% in a day. And now I'm getting interested again. What was this pattern here? How many times have we gone up? So this is where you do some homework, guys, right? How many times have we gone up since the crash up 4 days on the spin? Well, I've got one here. Oh, and one here. So what happened here? Well, it went up, it came retraced for a couple of days and then moved up. Well, that's interesting. Okay, so now when we look at this, we go, right, we're 4 days up. We go for 5 days up. That to me maybe suggests a change of trend. Fascinating. Now Monday's so important. For those of you technical traders, Monday becomes super duper important. And doesn't this chart look a little bit more bullish than that Ethereum chart, which is on its knees and trying to get down here and rotate down into horror space? This, on the other hand, is a breakout higher that maybe hasn't fulfilled its final target. Unbelievably, though, it isn't. So if we get back a little bit more, now I wonder how far we can go back. If this is as awesome as I think it is, this trading program. Oh, it doesn't do it. Does it do it? Does it go back any further than 2016? I will put a... I'm just double checking where the previous highs in coffee were, guys. Just hold with me 1 second because I've got the chart up on my other system here. So the all-time high in coffee is 300, which was last reached in 2012. So maybe this move here that we've seen isn't done. So have a think about that. I don't know why I've gone suddenly fuzzy. It obviously thinks that I'm now a blur. So anyway. And guys, it looks like we're almost out of time. So we just quickly go back to the daily chart again. And just so predictions, in terms of predictions, this bad boy, I don't think we're going to go down here. What we're going to see is up here. So now we have a different pattern. Okay, now we're into the pattern whereby if we go up, I think it's more in line with the technical picture. And if we go down, that's where we got to think about stop losses and all those things. Okay, guys, right. I think we're almost out of time. And Ainsley, as always, thank you very much for holding the wooden spoon for way too short a time. I think I was monopolizing and I apologize, but it was good fun. It was good fun to go and talk about these things and actually have a chance to rap about them. And there's some lessons in there, I think, for everybody as you go through these technical pictures about what the market is showing, to really focus in on some basics, right? About some systems, and also think about how you can improve your technical know-how, your technical skill set. So I think really that's pretty much it for today. Ains, is there anything else that you'd like to add?
No, nothing more. It's just looking at the chart and seeing the patterns repeat themselves, which is why they're called patterns. They repeat themselves. They have a tendency to repeat themselves because it's driven by human behavior, and human behavior is, well, the scope isn't that wide as it operates, and people then counter that with, oh, but algos are computers, but computers are all coded by, oh, humans. So, you know, in the scheme of things, getting to understand how those patterns operate and function when they are forming, and making sure that you take it when it is formed, not halfway through, or not when you think it's going to go here or the bar hasn't quite closed, is very helpful. And going back and having a look at those charts and seeing those patterns all unfold is going to give you a much more confident way of trading. And it's called doing the homework.
And I've got nothing more to add to that apart from exactly.
It's because you told me I had to go do the homework.
So, team, hopefully you've learned something from this Trader Cafe. And I apologise, we didn't have a chat about people's futures and their past this time. We actually thought we'd do some technical work on the charts, mainly because it's so interesting. And it's September, and it's always interesting in September. Let's see what the last week in September and what October and November is going to bring to us, guys, because I think volatility is going to still be around, and it's going to be quite exciting. So on behalf of myself and also of Ainsley, as always, if you have been, thank you very much for listening, and I will see you all next time. Thanks, Ainsley.
Have a good week. Bye, everyone.
Cheers.